Hi, I'm Steve Sprindis. I'm a co-founder and managing director with Waypoint Private Capital. In prior videos, we've described at a higher level the M&A Sell-Side process, as shown in this first slide here. But today I really want to focus just on the third and fourth chevrons here, the go-to-market and auction process. This is really where the process creates value for the seller. It is where we drive people to a timeline and through a process that elicits the best offers from all the buyers. So let's get into this. When we go to market, we've already prepared all of our marketing materials, and now we are going to contact the buyers. So with the business owner, we've already put together a list of potential buyers. On the deals Waypoint has worked on in its history, we've had buyers lists as small as 20 and as large as 1,000. But it's really typical that a buyer's list will be about 300 potential buyers. So for that list, we're going to send them the executive summary and then make follow-up calls to make sure that they've received the summary and know that is in their inbox and waiting for them to review. This executive summary is blinded. It doesn't have the seller's name, but has all of the highlights about their company so that a potential buyer can clearly evaluate whether they want to take the next step and move forward. We follow up with phone calls to all those who don't get back to us, but our goal in sending this out is to gather interested buyers. Those interested buyers will then send back the signed confidentiality and non-disclosure agreement that we sent along with the executive summary. So if we sent the summary to 300 people initially, we would expect about 60 signed NDAs back. So when we receive those NDAs back, we will send the confidential information right away so that they, one, learn the name of the company, and two, they really get to take a deep dive into the company and explore every different aspect of the company. We continue on then. Once we feel that all of those 60 potential buyers are fully informed, we've answered their initial questions, we then set a date for indications of interest. Let's just say we're setting it for 4 weeks out from when they receive the confidential information presentation. Everybody has to have their indication of interest into us by 4 o'clock on that Friday. They all now have a target date they're working towards. We tell them what we want to see in that indication of interest. It'll be a price range, how they came up with that price, the structure of the deal, whether they intend to keep management on and the owner. All sorts of different factors will be in that indication of interest. So they send that to us. We receive those on a certain date. We'll compare them. We typically will put them in a spreadsheet so we can see side by side, term by term, what those different indications of interest look like. We will then review those with management and decide on the group that we're going to invite to move forward. If we receive 15 indications of interest, I would expect that maybe 5 of those really fall within a lower group. About 5 to 8 would fall right in the middle, and 3 to 5 would really stand out at the top of that group as the leaders in the pack. We would invite in for management meetings and to continue in the process 7 to 10 companies in that group of 15. We then have those management meetings. That's the first time that the potential buyers get to meet with management. They come in, they tour the facilities, they ask their questions. We typically allocate about a half a day for each management meeting. We might throw in a dinner or a lunch on top of that just to add some time for people to really get to know one another. After that, we'll open up a data room. That data room, while to this point in the process with the larger group, we've only shared a certain amount of information, enough for them to make an initial offer. But now we're going back to everybody, asking them to sharpen their pencils, to give us their best offer. We've guided them on where we want them to come in on terms, or not where we want them to come in really, but we've guided them on where others are, where they need to improve. Someone might have the top valuation. We're not going to tell them that. But if they have something else in their indication of interest that is not as good as the others, we'll certainly point that out to them so they have an opportunity to correct that on the next round. So the letters of intent, again, we do the same thing. We've had the management meetings now. We have opened up the data room, and let's just say again, 4 weeks out from when those management meetings happen, we give them time to evaluate, and we say indications of interest are due Friday, 4 o'clock on this certain date. They all, again, get ready. During that week, they'll start sending their letters of intent. We do the same process as we did with the indications of interest. We take those letters of intent, we'll put them in a spreadsheet, compare them on a side-by-side basis. We'll sit down with the owner or the management team, and we'll talk about each of those potential buyers. Culturally, there's not always a fit. Someone might have a really good offer, but the owner just isn't comfortable selling to them. We'll look at all the different aspects. What are they going to do with the company afterwards? Is this going to be just absorbed into a bigger company, or is it going to keep its name, its location, and its employees? All of those are factors in the decision in who we're going to choose to go forward with. And this is the owner's choice. I want to make it really clear, while you talk about auctions, and a fast-talking car auction always ends in a successful buyer, and it's the highest bid that is successful in that auction. In the M&A sale process, the owner can end the process and say, I'm not comfortable, I don't want it to go to this person. It could go to the group with the third highest offer. It's all up to the owner to decide. So that's just a very big distinction from what I would say happens in a typical auction. We're now in this sealed bid auction. Nobody knows what's happening. At each step during this process, we're narrowing them down. There's all this buyer tension. They're competing. They're trying to get to the best offer. So we have now come to the letters of intent. They submit those letters of intent. We compare them. We're more than likely now going to take the top 3 of the 7 letters of intent we receive are pretty competitive. We'll now negotiate amongst those 3 and see who we can get to move up. At the same time, we will ask for references from those top 3. We'll call CEOs of companies they've purchased before. We'll call other people on their reference list just to make sure that we really feel comfortable, that management and the owner feels comfortable with who they're selling to. But in the end, we've negotiated now, and it's time to pick one party to move forward with. The LOI will be reviewed by attorneys and signed off on, and then the seller will sign with that one party and move into the next phase, which is due diligence. We have all sorts of negotiating power on the seller's side up until now when we pick the one party to move forward with, and that's when really power in negotiations evens out once we go into the legal process. But we're not going to get into the legal process today. So just to summarize, we've come through this funnel where we started with 300 potential buyers. We've come down now. We've picked a buyer. So what really are the advantages of the M&A auction process? The big advantage is we're creating a competitive environment amongst the buyers. It creates this tension. They want to win. They know that if strategically this company is important to them, they need to come with their best offers. It's not like a one-on-one negotiation where they're going to try to sneak in with the lowest possible offer. They know they have competition. They know that because Waypoint has been hired, we are taking this out to the market, and there will be other buyers at the table that they need to compete with. So what does that competition do? It drives superior offers. It's just natural that it does that. It increases the seller's negotiating power throughout the process, because we can always, instead of just saying no or I don't like that, we can always respond with, that's not what other buyers are offering us. That's not the terms or the conversations we're having with other buyers. That really has a different impact on the buyer you're negotiating with that's a different and better impact than if you just say no. They feel that they're off somehow and they need to adjust. They don't need to, they can choose to or not, but it really creates this great negotiating power. The other thing that we haven't really stressed yet is this process really increases the timeline for the deal. Because we're ready before we go to market, we set deadlines and we're clipping along at a certain pace, and they need to meet those deadlines or they're out of the process. It accelerates the deal process. It also increases the likelihood of closing. So they've gone through a lot of effort to get to this point. We've vetted them. We've talked to references. They're serious. If they get to the final stage, they are serious buyers and they are highly likely to close. Compared to if you're just in a one-on-one negotiation with a company, they can get to the end and just say, I changed my mind. We never see that. It happens, but we've never seen that in our deals where a buyer signs the LOI and just walks away. This all really just boils down to you've got a one-to-many negotiation, which adds all these benefits listed above compared to a one-on-one negotiation if you're just selling to a competitor that approached you and said, I want to buy your company. That is a fairly quick overview of the M&A go-to-market and auction process. We've done this many times. This is our bread and butter here. So if you'd like to learn more about this process or how to sell a company, please reach out to us, call or email us. Our contact information will be at the end of this video. Additionally, we have our insights section of our website. That section will have additional videos on the sell-side process and everything else to do with investment banking. Thanks for your time. Hope to talk to you soon. Bye.